Good morning, traders. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Wednesday, January 29th, 2014. These are your headlines as we turn the page from Europe to North America on this FOMC day. And, already the focus is really away from FOMC this morning. It's still on the emerging market interventions that we've seen taking place over the last, say, 24 hours. Ultimately, it seems that emerging market economies and their central banks are becoming worried that this accelerated pace of the Fed's taper, even though U.S. data might be not as strong as previously anticipated, we're seeing that these efforts are being made to strengthen the currency. Capital flight is sending these currencies lower. Already, for example, another central bank, we had the Reserve Bank of India raise its interest rate, surprise 25 basis point rate hike in order to increase the appeal or the yield of the rupee for investors to try to stick around. But so far today, these efforts are being unwound quickly. Aussie yen, a gauge of risk in the market, is seeing a retest of that of the support from the September and December 2013 lows. We got a pretty clean kiss of it, quite frankly, really touching it to the pip and then reversing quite hard. So we're watching this today as a leading almost indicator for risk, and that really tells us that the market is not taking many of these intervention efforts that seriously, taking them in stride. It really looks like when the efforts were first rumored on the 26th, this was a buy the rumor, sell the news type of event. So what we're seeing here now is that the Aussie is tending to come off. We're looking at Aussie dollars heading lower now ahead of this Fed meeting. We were talking about the potential for an Aussie dollar rally up into 88.10, 88.25 the last several days. We got that. We kissed the yearly low, the 2013 yearly low, and we've since sold off. We've actually broken the uptrend from this week's bounce, and now it looks like this bullish falling wedge really was just a day or two event. Now we're really looking to the Fed now, and ultimately, if we do break that 86.50 low, we are looking at the next acceleration lower in the Australian dollar. Pound Aussie paints a similar picture, and Pound Aussie is pretty important because it's not really a US dollar-centric pair. And indeed, we see that after it came into support from the uptrend that it's experienced in mid-month, from the January 13th and January 21st lows, we have a bullish falling wedge on this hourly chart. We have price picking up and now a hammer this hour above the moving averages with RSI above 50. This market looks like it's getting more bullish headed into the Fed as well. So we have a number of things on the docket today. Well, I'm going to come out with a more Fed-specific release later, focusing on the U.S. dollar pairs themselves. But that's it. Keep an eye on those emerging market pairs, emerging market currencies that may be, or even proxy currencies that may be linked to the emerging markets, as it's a good way to read risk in the market and whether or not any of this sentiment, recently flared sentiment, will go away soon. I'll be back again later. Good luck trading today if I don't speak to you before then, and have a great rest of the week.